So the first question you're probably asking is, what is a put option? Would that be fair to say that? Now, I want you to imagine, remember what's on the left-hand side? Shares. What's on the right? Options. Okay. Now, if you purchase some shares, if you had purchased some shares for $10, what's the most you can lose on those shares? $10. Your maximum risk is $10. In other words, those shares can drop from $10 to zero. Okay. Does that sound exciting? Sorry? Not very. No, okay. Who in the room drives a car? Who has insurance? Yeah? Would someone like to volunteer some information about their car and their insurance? Just simple, just what the car's worth and what you pay for insurance. Anyone?
Every year the car goes down and value of the insurance goes up.
Okay, that's not quite the detail I wanted. Anyway, okay, so...
$50,000, $800 insurance.
Oh, fantastic. What's your name? David. Okay, David just said the car's worth 50 grand. In other words, it's insured for around 50 grand. Let's not get into market value and all that crap, okay? Would you agree that it is insured for 50 grand, yeah? Yet, so something in the past, David, had happened to your car, which we hope doesn't happen going forward, but if something in the past had happened to your car, the insurance company would have paid you 50 grand. Yeah, fair enough, okay. But you only paid $800 for that. Wow, that's interesting. Are they crazy? How do they make their money?
From the ones that don't have any claims.
From the ones that don't have any claims. Okay, I get what you're saying. So if you get enough people together to pay all those $800 amounts, all the $800, but only one of them makes a claim occasionally, you actually end up in a profitable situation. Okay, is that how it works? Okay, that sounds like, I mean, I get that. I understand that. So, what do they call it, $800? They call it supplement. Premium. Okay, gotcha. So basically what the insurance policy gives you is the right to get $50,000 for your car no matter what happens to it. In other words, it's the equivalent to selling your car to the insurance company for 50 grand even though it's only worth $10. Is that right? If something had happened to it. I get it. Okay. So, let me just relate that back to a put option. If you purchased a put option, now your insurance policy is a contract between you and the insurance company, isn't it? And it's normally a contract that's valid for about 12 months. Would you agree with that? Yes. So I'm going to show you the equivalent in the share market. I'm going to give you a simple way, then I'm going to complicate it for you. Is that okay? Okay, good. Now, I want you to imagine that this put option is a contract between you and the silly person who sold it to you. Much like the insurance company were crazy enough to take on the responsibility for your car. Same deal. And that contract is valid for 12 months. With me so far? Now, this put option will normally relate to a share. So let's say this share is called XYZ share, then this put option would be an XYZ put option. What's missing in this diagram? How much we paid for it, hey? Yeah? Now you know how David paid $800 but it insured him for $50,000? I'm going to suggest that this put option may be, and it will vary depending on a whole bunch of parameters. So don't hold me to the numbers, I just want to get the concept across to you. Let's say this $10 put option only costs you, say, $1.20. Okay, now this $1.20 is the premium that we pay. Okay? That's the premium that you pay. This $10 here, which is the equivalent of the agreed value, is what we call the exercise price. It'd be good if I could spell exercise. Now, what we're saying here is, we've purchased a put option that is valid for 12 months. In other words, in 12 months' time it will expire. We paid only $1.20 for it, but it actually gives us the privilege, the right, to sell these shares for $10. Can you buy shares in the share market on their own for $10? Yes, you can. Yes, you can.
You've got to pay it, right?
Yes, you can. Okay. Right. Yes, there are brokerage fees involved, you're right, but I'm not saying that now. Okay. Can you buy a put option on its own in the options market?
Probably not.
Yes, you can. You can actually purchase shares on their own, or you could say, no, that doesn't make any sense to me. Those shares are going down in value. I would rather just go and buy some put options. From my options account. Okay, now I want you to imagine that this piece of paper is what I've just illustrated to you on the board over there. So, in owning this piece of paper, what privileges does it give me? It gives me the right to sell these shares for $10. So, if these stupid shares, which I have not bought, and this is where it varies from insurance, because you need to have the car that goes with the insurance policy, don't you? This is where it varies from the insurance. If these shares do go down to $1, would you get excited about having one of these?
Yes.
Absolutely, because even though you don't... Can I get a volunteer, please? Anybody? Yes, come on up. Can you stand over there, please, sir? Can we give him a big hand? There you go. Okay, just hold these shares for a second, okay? Now, hold the shares up at $10, and I've got these. Now, they crash down to $1. Now, I only own this, but this gives me the right to sell those shares for $10. But I don't have those shares, do I? So what can I do? I can ring my broker and instruct my broker that because I have one of these, go on my behalf and buy those shares for $1, and then on my behalf I want you then immediately to sell it for $10, and I would have exercised my option and I would have made a profit of $9 less what I paid for it. In other words, in that transaction I've made a profit of $7.80 in a falling market. Who thinks that's absolutely fascinating? If you bought both, if you bought the shares as well as the put option, if your shares go down in value to $1, can't you still sell them for $10? Yes, you can, because your put option gives you the right to sell those same shares for $10. And in that way, you can use your put option as insurance on your shares. So what I'm saying to you is put options are a way of insuring your share portfolio.